Hello and welcome back to Money Never Sleeps. My name is Timur from M&A Wealth. If you'd like more information about what you hear during the show, give us a call at 866-973-3627 or visit us online at mandawealth.com. And while at my website, click on the page to check out past shows and subscribe on Apple Podcasts or Spotify. During today's show, we're going to chat about some of the financial New Year's resolutions that can help you meet some of your goals and have you looking toward retirement with more confidence. A CNBC article, 9 Financial New Year's Resolutions to Set Now and Achieve in the New Year, has some excellent potential resolutions, the first of which is saving more. As likely comes as no surprise, many people list saving more money as their top financial resolution. Fortunately, there are many ways to increase your savings. You can ramp up your 401k contributions, make automatic contributions to a high-yield savings account, and reduce your number of recurring subscriptions. The article notes there are currently several high-yield savings accounts offering APYs of around 5%, including UFB Portfolio Savings, the Boss Bank Interest Savings Account, and Lending Club Level Up Savings. Furthermore, you may also be able to use a credit card to your advantage for expenses that you can't reduce. Many of the best cards available offer competitive rewards and statement credits that often provide cash back, points, or miles that can be used on purchases. The Wells Fargo Active Cash Card, for example, offers unlimited 2% cash rewards on purchases. Receiving 2% in cash rewards on your purchases is a very competitive perk. Your next potential New Year's financial resolution is improving your credit score. If you have a less than solid credit score, which is anything below about 670, make it a priority to improve it in 2025. You can do so in many different ways, including paying your bills on time and in full. With this, setting up automatic payments may be your best move. Additionally, limiting how many new accounts you open and reducing your spending are other ways you can improve your credit score. You may also want to speak to your financial services professional about free services that give you credit for paying your utilities, phone, streaming services, and other eligible bills that aren't typically included on credit reports. Another solid resolution is building a comprehensive personal budget. While a budget may feel constricting, the truth is that carefully tracking your spending can be a valuable tool to provide a clearer picture of where your money is going month to month. A thorough budget can also provide information about what you can and can't afford, as well as offering opportunities for cutting back on your spending. Begin the process by writing down all your fixed expenses like your housing costs, phone, groceries, and savings. Also reach out to your financial services professional for a recommendation about a budgeting app. Make sure you also share your budget with your financial services professional, because they'll likely be able to offer tips and advice, as well as using your budget information to find new opportunities for saving or investing your money. Paying off credit card debt is another potentially useful financial resolution. The reality is that the average American is currently carrying a little more than $6,000 in credit card debt, according to the article. If you want to get out from under credit card debt, you may want to consider consolidating it on a balance transfer credit card that offers zero interest for a fixed period. Typically, balance transfers must be completed within a stated amount of time. While balance transfers may be a tool for getting yourself out of debt, you'll get the most benefit if you pay off the entire balance before the intro period ends. Before you make a balance transfer, be sure to familiarize yourself with all the terms and conditions that come with the card, especially the dates of the interest-free period. Once you know when that 0% period ends, be sure to work with your financial services professional to build a plan that positions you to make significant payments on your debt during the intro period so that you're more likely to be debt-free when that window closes. Paying off your full credit card balance at the end of the month is yet another smart move. Your payment history is often the most important piece of your credit score, which means that it's vital to pay your credit card balance on time and in full every month, regardless of what kind of card you have. Paying off your entire balance not only improves your credit by lowering your utilization rate, which is the amount of credit you're using compared to the amount of credit that's available to you, but it also lowers interest charges or fees that can sometimes result from carrying debt from month to month. If you're not always able to pay off your balance in full, you should at least make your minimum payment on time because it will help you avoid late fees and penalty interest rates. Next, while there's not universal rule to how many credit cards you should have, the average American currently has about 3 cards. That certainly doesn't mean 1 card isn't enough, or that 5 cards are too many. It all comes down to how many credit cards you can manage responsibly. But you should note that each time you apply for a credit card, regardless of whether your application is approved or denied, the card issuer pulls your credit report. Credit inquiries can negatively affect your credit score, though it will improve over time. Spacing out your credit card applications may help you divide your credit checks out over a wider period, thus reducing the overall impact on your score. Your next resolution should be to check your credit score often. Many resources are available to regularly check your score, including Chase Credit Journey, CreditWise from Capital One, and Discover Scorecard allow you to check your credit score for free. In some cases, you can get an updated credit score every month and see the factors impacting your score. Be aware that checking your credit score doesn't lower it. Don't let this persistent credit myth prevent you from improving your financial health. Your credit score is a 3-digit number that ranges from 300 to 850, and it's tabulated using a review of your credit file. This is the number that tells lenders whether you're a credit risk or if you'll be able to pay back a loan. Credit scores factor numerous things, including your payment history and the length of your credit history from both your current and past credit accounts. Credit score ranges vary depending on whether the FICO or VantageScore model is being used and by which credit bureau, Experian, Equifax, or TransUnion pulls your score. Ratings reflect bad/poor, fair/average, and excellent/exceptional credit behavior. Your rating is determined by your credit score. Though the article notes that lenders have a clear preference for FICO over VantageScore, so much so that it's used in more than 90% of U.S. lending decisions, it adds that you should regularly check both your FICO and VantageScore numbers, because it will give you an accurate sense of your standing. Beyond knowing your credit score, it's also important to frequently check your credit report. Doing so can help you identify signs of fraud, as well as ensuring that the correct information has been reported to all 3 major credit bureaus, Experian, Equifax, and TransUnion. You may also access one free credit report from each of those 3 main bureaus at annualcreditreport.com, which is dictated by federal law. If you have any questions about your retirement magic number, your retirement strategy, or any other parts of your financial strategy, visit my website at mnawealth.com or call my office at 8669-733627 to discuss how my team might be able to answer your questions and address your concerns. It's our goal to help you prepare for the retirement you've worked so hard for.
Disclosure: all matters discussed during the show are for informational purposes only. Opinions expressed are solely those of M&A Wealth and staff. All topics covered are believed to be from reliable sources. However, M&A Wealth makes no representations as to its accuracy or completeness. This commercial shall in no way be construed as a solicitation to sell securities or advisory services to residents where permitted. Topics should be discussed with your individual advisor prior to implementation. Advisory services offered through M&A Wealth, a registered investment advisor in the state of Texas. Insurance products and services are offered through PNC Life Insurance Agency, an affiliated company. M&A Wealth and PNC Life Insurance Agency are not affiliated with or endorsed by the Social Security Administration or any government agency.